The Warren Buffett indicators scream sell, but is he missing out on innovation once again? Hello, this is Chart GPT today. Yeah, Berkshire Hathaway and Warren Buffett's been in the news. He's in his 90s there, but he's still relevant. He's got a lot of cash sitting around ready to go to work here. And he's very, I wouldn't say negative on the stock market, but he thinks it's way too pricey. Let's take a listen to what he has, his opinions on the stock market are.
You know, it isn't like I'm got a hunger strike or something like that going on. It's just that things aren't attractive, and there's certain ways that can change, and we'll see whether they do.
Of course, this is Warren Buffett's methodology. He's not necessarily investing in products and services that are going to make huge amounts of money per se. He makes most of his money swinging on the cheap, and basically when things are bad, buy low and sell high, which is part of capitalism. I understand that, but it's more about waiting for the market to get too pricey, holding cash, and he can, if you're a long-term investor, that's a good way to do it. Hold cash, and then when things fall apart, swoop in there and buy on the cheap. So it's more of a market calling, long-term, valuation market calling, as opposed to specific innovation that is coming. He's largely missed out on a lot of the innovation that's happened over the last 45 years. He's investing for the future, so to speak. Here's his indicator. It's the corporate equities divided by the nominal quarterly GDP. That's what people use, and it's obviously screaming sell. It's way too high. That being said, it's been on, the whole curve has been upward. So if you actually look at a curve, yes, it is pricey relative to the curve, but is it really that pricey relative to the actual curve and is, the way things have gone? I'm not so sure. But here's his picture. He's got this surging, he seems to surge cash when things are pricey, which is, again, kind of a vulture capitalist. And it's worked fairly well, and that's why people use this. But again, it's not necessarily investing in innovation. So one has to wonder, when you look at this indicator, GDP, what if AI could boost the GDP, which would make this indicator drop quite rapidly if we have a sudden rise in GDP, if you believe in AI. But of course, it depends if you believe in AI. He says he's not afraid of AI, he doesn't understand it. But he also says that when something can do all things like AI, I get a little bit worried we won't be able to uninvent it. So he's comparing it to the nuclear bomb. So he says he's not afraid of it, but yet he is. Don't think he understands it. I don't think he's not really understanding the productivity potential that's coming out of it. And so he's probably not investing hugely into it. Again, he's more a vulture capitalist. So take a look at Berkshire Hathaway. He's been very successful, so his methodology does work. However, that being said, it's being less and less, because I do think he's missing out on the innovative things that are occurring. Actually, when you look at his growth rate, even though that stock chart looks pretty good, it still falls below the S&P, and of course the S&P is low compared to the FANG stocks, or the technology stocks. So investing in technology would be far, far more better than investing in Berkshire Hathaway. That being said, maybe Berkshire Hathaway is a good, solid investment strategy, but in overall, I don't think it's done. Certainly hasn't done as well as the S&P, and it certainly hasn't done as well as the innovative stocks. Of course, past performance does not guarantee a future event, so it is what it is. Take a look at the write-up on the AI about the Buffett indicator and how well it is and how suitable it is. And take our online poll. Is Warren Buffett missing out on innovation, specifically the AI revolution? Follow the post link in the description box, and don't forget to subscribe.